can the stock market rally really continue for months? Chris Vermeulen takes a look at the technicals, and what he has come up with may be surprising. He rests the details by Chris Vermeulen via the Technical Traders. Our research has been spot on with regards to the markets for the first few weeks of 2018. We issued our first trade on January 2nd, plus 2 very detailed research reports, near the end of 2017 and early 2018. We urge you to review these research posts, as they tell you exactly what to expect for the first quarter in 2018. Continuing this research, we have focused our current effort on the transportation index, the U.S. majors, and the metals markets. The transportation index has seen an extensive rally, plus 19.85%, originating near November 2017. This incredible upside move correlates with renewed U.S. tax policies and economic increases that are sure to drive the U.S. equity market higher throughout 2018. In theory, the transportation index is a measure of economic activity, as related to the transportation of goods from port to distribution centers, and from distribution centers to retail centers. The recent jump in the transportation index foretells of strong economic activity within the U.S. for at least the next 3 months. One could, and likely should, watch the transportation index for any signs of weakness or contraction which would indicate an economic slowdown about to unfold. In order to better understand how the transportation index precedes the U.S. equity markets by 2 to 5 months, let us compare the current price activity to that of 2007 to 08. This first chart is the current transportation index, and shows how strong the U.S. economic recovery is in relation to the previous year, 2017. As the U.S. economy has continued to strengthen and open up new opportunities, the transportation index has related this strength by increasing by near plus 20% in only a few short months. This shows us that we should continue to expect a moderate to strong bullish bias for at least the first quarter of 2018, unless something dramatic changes in relation to economic opportunities. Current transportation index chart in comparison. This chart, below, is the transportation index in 2007 to 08, which reacted quite differently. The economic environment was vastly different at this time. The U.S. Fed had raised rates consecutively over a 2-year period leading up to a massive debt/credit crisis. At the same time, the U.S. had a presidential election cycle that saw massive uncertainty with regards to regulation, policies, and economic opportunities. Delinquencies as related to debt had already started to climb, and the markets reacted to the economic alarms ringing from all corners of the globe. The transportation index formed a classic rollover top formation in late 2007 and early 2008, well before the global markets really began to tank. 2007 to 08 transportation index chart. Our analysis points to a very strong first quarter of 2018 within the U.S. and for U.S. equities. We believe the economic indicators will continue to perform well, and, at least for the next 3 months, will continue to drive strong equity growth. We do expect some volatility near the end of the first quarter, as well as continued 2 to 5% price volatility/rotation at times. There will be levels of contraction in the markets that are natural and healthy for this rally. So, be prepared for some rotation that could be deeper than what we have seen over the last 6 months. In conclusion, equities at this point are overpriced and overbought based on the short-term analysis. We should be enduring slightly weaker time for large cap stocks over the next couple weeks before it goes much higher. Because we are still in a full-out bull market, dips should be bought, and we will notify members of a new trade once we get another one of these setups. In our next post, we are going to talk about 2 opportunities in precious metals forming for next week. Investors beware. Cryptocurrency mania reminiscent of the dot-com bubble. Cryptocurrency mania to end like the internet bubble? Cryptocurrency mania is in full gear. It feels like we are back in 1999. Investors beware. You see, if you were even remotely involved in the markets during the internet bubble, you would attest to this. If a company mentioned internet in its press releases, its stock price would soar. During the internet bubble, there were companies that didn't even have revenue, but their stock prices were soaring because they had something to do with the internet. Now, we see something very similar. These stocks soaring just because they mentioned blockchain. All a company has to do these days is mention blockchain or cryptocurrency in its name or press releases, and the stock price soars. Look at the chart below of Eastman Kodak Company, NYSEKODK. Chart courtesy of StockCharts.com. Notice the spike in the last few days. This is not because the photography company reported stellar financial performance or revolutionized film technology. It was simply because the company said it would launch a cryptocurrency called Kodak Coin and would utilize blockchain technology. Source: Kodak and WEN digital partner to launch major blockchain initiative and cryptocurrency. Eastman Kodak Company, January 9, 2018. In a matter of 2 days, the stock price jumped well over 250%. Before the news, KODK stock traded near $3. Look at another chart below. It shows the price action of a company called Long Blockchain Corp., Nasdaq LBCC. Chart courtesy of StockCharts.com. Until mid-December, this company was called Long Island Iced Tea Corp. Suddenly, it had a change of heart. It changed its name to Long Blockchain Corp. Investors flocked to buy the stock. Source: Long Island Iced Tea soars after changing its name to Long Blockchain. Bloomberg, December 21, 2017. Before the news, LDCC stock traded below $2.00. It trades at $5.55 now, and went as high as $9.00. Lastly, look at another chart. It shows the price action of Riot Blockchain Inc., Nasdaq Riot. Chart courtesy of StockCharts.com. Notice how, all of a sudden, in the past few months, the stock price has jumped immensely. Until mid-October, this company was called Bopti, and was a biotechnology company. Now, it is a blockchain company and mines cryptocurrencies. In September, this company's stock was just around $3.50. It trades close to $23.00 now, and went as high as $46.00 in December. What is next with cryptocurrency mania? Dear reader, what we see these days is a clear sign of mania. There is too much speculation, and not much attention is being given to the fundamentals. These days, cryptocurrency and blockchain have become buzzwords, like internet was in 1999. I truly like blockchain technology and what it could do. But I see it as something in the early stages. Here's what I know: manias eventually do end. There is usually a moment that separates the men from the boys. We saw it happen with internet stocks as well. The real companies remained, and those that were just riding the wave got washed away. I will end with this. It's important to pay attention to details. Don't just buy the story the company is giving you. Look at the numbers and see if it makes sense. In the next 5 years, many of the cryptocurrencies may not be around. So, tread lightly. Continuing this research, we have focused our current effort on the transportation index, the U.S. majors, and the metals markets. The transportation index has seen an extensive rally, plus 19.85%, originating near November 2017. This incredible upside move correlates with renewed U.S. tax policies and economic increases that are sure to drive the U.S. equity market higher throughout 2018. In theory, the transportation index is a measure of economic activity, as related to the transportation of goods from port to distribution centers, and from distribution centers to retail centers. The recent jump Can the stock market rally really continue for months? Chris Vermeulen takes a look at the technicals, and what he has come up with may be surprising. He rests the details by Chris Vermeulen via the Technical Traders. Our research has been spot on with regards to the markets for the first few weeks of 2018. We issued our first trade on January 2nd, plus 2 very detailed research reports, near the end of 2017 and early 2018. We urge you to review these research posts, as they tell you exactly what to expect for the first quarter in 2018. The transportation index foretells of strong economic activity within the U.S. for at least the next 3 months. One could, and likely should, watch the transportation index for any signs of weakness or contraction which would indicate an economic slowdown about to unfold. In order to better understand how the transportation index precedes the U.S. equity markets by 2 to 5 months, let us compare the current price activity to that of 2007 to 08. This first chart is the current transportation index, and shows how strong the U.S. economic recovery is in relation to the previous year, 2017. As the U.S. economy has continued to strengthen and open up new opportunities, the transportation index has related this strength by increasing by near plus 20% in only a few short months. This shows us that we should continue to expect a moderate to strong bullish bias for at least the first quarter of 2018, unless something dramatic changes in relation to economic opportunities. Current transportation index chart in comparison. This chart, below, is the transportation index in 2007 to 08, which reacted quite differently. The economic environment was vastly different at this time. The U.S. Fed had raised rates consecutively over a 2-year period, leading up to a massive debt/credit crisis. At the same time, the U.S. had a presidential election cycle that saw massive uncertainty with regards to regulation, policies, and economic opportunities. Delinquencies as related to debt had already started to climb, and the markets reacted to the economic alarms ringing from all corners of the globe. The transportation index formed a classic rollover top formation in late 2007 and early 2008, well before the global markets really began to tank. 2007 to 08 transportation index chart. Our analysis points to a very strong first quarter of 2018 within the